Hi everyone, I hope you can hear me. This is a webinar on Finding the Missing Millions, which is a handbook for using data from the oil, gas and mining industries to hold governments and companies to account for the revenues generated by those industries. So my name's Don Eagleton. I'm a senior campaigner with the NGO Global Witness. We investigate corruption, human rights abuses, and environmental damage in the natural resource industries. And we also campaign for legislation to prevent these kinds of abuses. And one of the campaigns that I've worked on for many years is the Publish What You Pay campaign, which is a network of around 700 civil society organisations, most of them based in resource-rich countries, advocating for greater transparency in the natural resource industries. And we've been very successful in establishing laws that require oil, gas and mining companies to disclose their payments to governments, such as taxes and royalties. And these payments are worth, hundreds upon hundreds of billions of dollars a year and are a vital source of government revenue that should be used to improve conditions for people living in resource-rich countries. But too often we see the money get siphoned off into private pockets, whether that's through corruption, mismanagement, or tax avoidance. And so, partly because we've been so successful in getting these laws, of course, we have so much more data now. In fact, we have data at an unprecedented level of transparency than before. And the question arises, of course, is what do we do with that data? How do we use it to maximize the impact of this, greater transparency? So Global Witness teamed up with Resources for Development Consulting to produce a handbook which shows you how, it gives you these practical examples, tests of how to use the data to hold governments and companies to account. I'll hand over to Don in a minute, actually, because we're lucky to have him here in London in Global Witness's office. But before I do that, I'll just very quickly give an overview of the objectives for this webinar. Okay, it doesn't seem to be working. There we go. So just very briefly, we want to try and give a sense of why using revenue data, is important. We want to show that it can be simple in many cases, and that anyone can do it. And we'll also give an overview of what's in the handbook, or the different tests in the handbook. There's 10 of them altogether. We've only got time to look at, let's say, 3 or so, just an overview. But that should give you a flavour of how you can practically use data, and also some real-life case examples. And finally, really perhaps the most important objective is, it would be fantastic if everyone who's attending this webinar, went away and actually tried out some of the methods in the handbook and used the data. And we hoped to encourage you to do that. So I'll just hand over really briefly now to Don. He's the president, Don Hubert, the president of Resources for Development Consulting, who'll just give you a bit of an overview on the genesis of the handbook and why we put it together.
Thanks very much, Dom. It's a pleasure to be with you today. As Dom said, my name is Don Hubert, and I run a company called Resources for Development Consulting. We exist to pursue one simple but challenging purpose, which is to get a fair share of extractive sector revenues for citizens. And we really mean citizens by that, not just governments. We see that there's three main reasons why this doesn't happen: an imbalance in expertise between governments, officials, and the lawyers and accountants who work for the companies, company tax avoidance or tax evasion, and finally government corruption. In many cases, the last two are intimately linked. We were excited to collaborate with Global Witness on this project because we share the view that there's a lot of revenue data out there and not a lot of analysis being done of it. If we think about the Extractive Industries Transparency Initiative, in many countries there's more than a decade of public domain data. And when we started this project, I was expecting that we would look to see a series of analytical methods for looking at this data, and we found very little. So in fact, I think what we've done in the first instance is to really articulate for the first time a series of ways in which this data can be analyzed. And I want to suggest that there's an underlying method here, and I'll use the phrase a citizen's audit, because I think that's really what we're doing. What we're doing is trying to understand a series of methodologies that have a logic to them, an inherent process to them that allow us to hold companies and governments to account. And it really is an audit methodology, and that word shouldn't scare anyone. It's as simple as you generate an expectation from some set of sources, and Don will talk more about this. You compare that expectation to actuals, and if there's a significant discrepancy, you have what we would call a red flag. And a red flag doesn't mean that somebody's doing something illegal or illicit. A red flag means you've got a question, a discrepancy that needs to be examined or followed up on. So we articulated ultimately, as Don said, a series of 10 tests. And these tests are ordered essentially in the sequence of complexity. The tests that are easiest to run, where the smallest amount of additional data is required, come at the start. The tests that are more complex come at the end. And let me just conclude with this core point, that campaigners have got extraordinary amounts of revenue data in the public domain. But revenue data needs to be compared with something, potentially even just itself over time series. And so it's really important to combine other sources of data with revenue payment data in order to increase the chances of getting accountability from both companies and governments. I'm excited to be here today. Just by chance, I'm in London for the day on my way to Africa, and I'll be happy to answer questions if there are any that pertain more to the technical side of the question. With that, I'll thank you and hand it back to Don.
Oops, okay, thanks, Don. Yes, so just to point out that if you have any questions, you can put them in the chat room. I'll talk for about maybe 15 minutes now, 20 minutes maybe, and then we'll break for clarifying questions. So if you try and keep it to clarifying questions for the time being. And then after that, we'll spend just a few more minutes looking at some of the actual tests that are in the handbook, just to give you some examples, some practical examples for how you can use the data and, to show that it really can be very beneficial. So a really key thing, a really exciting thing about the legislation is that it requires companies to report their payments to governments at the project level. So for every single project that a company invests in every single country that it operates in the world, the company has to report all the payments it makes to the government from that individual oil, gas, or mining project. And this is basically an unprecedented level of transparency. And we really have an opportunity here to kind of use this data. And it's important, I'll just give you a few reasons why it's important to have project level revenue data. It's, basically how much governments and citizens get for their natural resources is, generally speaking, decided on a project by project basis. The government will go into negotiation with a company. They will do a deal, and it's that deal, over a certain oil, gas, or mining project, an individual project, and it's that deal that sets the terms for what governments and people actually get. So it could be a good deal, it could be a bad deal, but we won't know that unless we have project level transparency, or we can't get to answer that question. It also incentivizes governments to get the best deal for citizens. If government officials go into negotiations with a company knowing that the financial impact of that deal is going to be put in the public domain for everybody to see, that should incentivize them to maximize the benefits for citizens. We also know that revenue losses happen at the project level. And for just one individual project, we've seen so many examples of governments losing billions upon billions of dollars just from one project, whether that's to do with tax avoidance, corruption, or as Don kind of rightly points out, the two are intrinsically interlinked. And another really important reason for having this level of transparency is that the payments from one project can be absolutely massive. Of national importance, regularly up into the hundreds of millions of dollars just from one project, and even going into, again, into the billions of dollars just from one project. Money that in some countries could cover the entire public education budget. So it's important to have this level of transparency so that people living in these countries can follow the money and hold their governments to account for how it's used. So just to say quickly on which companies report payments to governments. There are, as I mentioned, there are laws now in place in the European Union, Norway, and Canada. They apply to large oil, gas, or mining companies that are incorporated in any of those jurisdictions. And they also apply to companies that are listed on stock exchanges in any of those jurisdictions. So just to clarify here, that these laws have worldwide effect. They apply worldwide. So just for example, if an oil company is incorporated in the United Kingdom and it has an oil field, an oil operation in Indonesia, it has to report the payments it makes to the Indonesian government so that people in Indonesia know how much they're getting for their natural resources, and they can hold their government to account for that. Similarly, if a mining company is listed on a stock exchange in Canada and it has a mining operation in Peru, it will have to disclose the payments it makes to the Peruvian government from that mining operation, the taxes, the royalties, etc. Also really important is the Extractive Industries Transparency Initiative. I'm sure that many people on the webinar will be aware of the EITI. I think the one of the key things about this, about the EITI, is that all EITI reports starting this year, from this year onward, have to include the payments that oil, gas, and mining companies make to governments at the project level. So this is a new requirement in the EITI. And the EITI is being implemented in around 50 countries across the world. So you can see that this is a potentially huge development, that it really exponentially increases the amount of project level data that we could get, covering many countries, certainly many companies that aren't necessarily covered by the mandatory disclosure laws, and there's a real potential here that I think we really need to make use of. And as Don points out, actually, in some countries, EITI countries, some of the payments are project level anyway, and have been for many years. If a company only has one project in an EITI country, then de facto that's a project level payment. And we're kind of maybe missing a trick here, and we should really try to mine this important data. So just very quickly on the types of payments that companies report. Again, the legislation requires detailed reporting. Not only do companies report at the project level, but from each individual project, they have to report the different types of payments that arise from that project. The most important ones being, and the ones that we focus on most in the handbook, are taxes, royalties, and something called production entitlements, also known as profit oil, which is an extremely important source of income for governments in oil and gas producing countries. Essentially, instead of getting money in taxes and royalties, the government will be allocated a share of the actual production, the physical production of the oil or gas, and that's how the government gets paid. And again, I mean, we're talking huge, vast payments here to the governments, and it's really fantastic that we have this, much greater transparency over profit oil, and for that matter, royalties and taxes. So I just wanted to give you an example of a payment report, just so you can see. I mean, this is an excerpt from Glencore's 2015 payment report, Glencore being a very big oil producer, mining company. And yeah, we can see that from this excerpt, it just has, well, there's 3 different countries: South Africa, Tanzania, and Zambia. We can see for Zambia at the bottom, there are 2 projects reported on there. Tanzania, it's just the 1 project. And in South Africa, it's 2 projects. We can also see, well, hopefully you can see that, how it's broken down by taxes, royalties, production entitlements, etc. And I guess one thing to point out here is that, this is quite a small amount of data. This isn't, from one project, it's not, we're not talking about huge, great big data sets that need to be manipulated and, in a very sort of technical way. I mean, really, we're just looking at a few figures here for an individual project. So hopefully that, it's kind of less intimidating than you might think. It's not always about, in fact, for the most part, it's not about manipulating huge data sets, certainly not for the handbook's methodologies. I also just wanted to show you this excerpt to just try and give you a sense of how easy it can be to identify what we would call a red flag. If you look at the South Africa section and the first project, the Mpumalanga coal project, we can see clearly that it's paying a significant amount in royalties, almost $12 million. This shows straight away that the project is in production. The handbook, explains that, that's why that is, and why if a company is paying royalties, then that it will be in production. And yet we see that it paid 0 tax. Now, there could be a very legitimate explanation for this. There isn't necessarily wrongdoing. But, I was quite interested in looking at this, and I saw, for example, that very quickly found out after like a 5-minute, internet search that the company, that the project produced around $1.5 billion worth of coal in that year, in 2015. I also saw that the project is a mature, what they call a mature project. It's not a new project. I'll go into this in a little bit more detail in the webinar, but if you see that if it's a project that's just come into production, you wouldn't expect it really to be paying tax or much tax at all. But again, it just took me 5 or 10 minutes of research to see that this project has been in production for many, many years. It's what you call a mature project. And so there you go. This is just looking at one payment report, and quite easily, sometimes you get to, what you could call a red flag. But it's very important to point out that this is, there could well be a legitimate explanation for this. This does not prove in any way misconduct on the part of the company, but this is the start of further inquiries. I mean, you can see here that there's definitely a public interest in finding out why the tax payments were zero on a mature project that's producing around $1.5 billion worth of coal every year. Another really great thing about the legislation, the transparency rules, is that it requires companies to disclose the government agency to which the money was paid. So this helps us follow the money in and out of government accounts. And here's just an excerpt from Shell's 2015 payment report. Hopefully you can see that it paid the Treasury around $60 million in 2015. The oil company, the government-owned oil company, got around $150 million. If a government company, if it's a government-owned company, then Shell will be required to disclose the payment. But one thing caught my eye about this this part of the report is, what's this commune de Gamba? I just wondered what that might be. We see a payment of almost $12 million going to the commune de Gamba. And again, I mean, it just took me a few minutes, internet research to look. This appears to be a kind of a community level trust. Gamba is actually it's a small municipality in Gabon, but it's heavily impacted by the oil industry. It seems there are significant social and environmental impacts, and it seems to me that this money probably is for a community trust to benefit people who live in that small town. But again, it kind of raises questions. Was that payment made in full to the commune de Gamba? Did the commune de Gamba, receive that? Can they demonstrate they received that payment? What happened to that money? Was it ultimately used to benefit people living in that area? So you can see very quickly that it's quite easy to. Sometimes you can just pick up a payment report and you will have questions. Questions can fall out very quickly just from picking up a payment report and having a look. But as I say, this is just it's just the start of your inquiry, and further investigation will be needed. So just quickly on where to get payments to government's reports. I would say the first place to go to is resourceprojects.org, which is a fantastic tool created by the Natural Resources Governance Institute, NRGI, another NGO. Really great place to go, kind of a one-stop shop to get your payment reports. And there are many reasons for this, but one of them being that, I'll just give an example. If you see on the left there, there's a button to filter the data. And by the way, this has pretty much every single payment published by a company under the European and Canadian laws, all on this database. Around well over $500 billion worth. So you can see that, just for example, a really good one is you can manipulate or there's a filter button on the left. I hope you can see, and you can filter the data by country. So if you're interested in a particular country, you live in a particular country, an oil or resource producing country, there you go. You can just get all the data, just very, very quickly, very simply, and you can hopefully see there that it's broken down by project. And also, if you look on the right-hand side, hopefully you can see the size of payments we're talking about here from just individual projects, anything up to $933 million, if you can see just at the bottom right there. So yes, so just quickly going on, again, you can manipulate by company if you like, and here's an example of I've just given Glencore. So this would give you all the different countries that Glencore is reporting payments in by project, types of payment, etc., and the amounts. So it's a great resource. Okay. Some other places to get payments to government's reports. EITI reports is an obvious one. But also happily, the Canadian reports are on a centralized site. So you can, the handbook will give you the link to that, but it's a really easy to go and get the Canadian reports. And there are hundreds of companies that are reporting under the Canadian laws all across the world. So I think this will be the last slide before we break for a couple of clarifying questions. And so just to point out that you will inevitably use additional data in combination with your payment reports when you're doing analysis. And actually, I think it will be, often it's very intuitive. You will know yourself which pieces of information you need if you just start kind of digging around and using the data. And the handbook gives you pointers to where you can go and get this additional information. And it's surprising, how much information is out there that it's possible to get at the project level. For sure, some key other data points are, kind of locked away in contracts that are secret. For example, the fiscal terms, which are really important for analysing data. So when I say fiscal terms, I mean things like what the tax rate is, what the royalty rate is, what the government gets in the share of production, actually what the community gets would be a fiscal term. But quite often, this information will be in the public domain, from other sources. And I was quite surprised to find out, that it's possible to get this information, not all the time, but it's definitely worth having a go and doing that. Yeah, and like I say, the handbook kind of gives you more information about, why this data is important and how you can use it and where to go to get it. And just, for example, a really key one is the phase in the project lifecycle. So, for example, when a project starts, an oil or a mining project starts producing its first production, you would expect it to be paying royalties, from the moment of production. But when it comes to taxes and profit oil, you wouldn't expect those payments to be made in the early years of production. And the handbook goes to kind of shows you, explains to you why that's the case. And this helps us to use the data more responsibly and more accurately. Okay, I think we can stop here because you're probably bored of hearing me talk so much. Yeah, why don't we stop here and just have a couple of clarifying questions? Yeah. Okay, someone from Nigeria. Oh, so yeah, there's a question from Henry, which is about accessing contractual documents between governments and companies. Yeah, so I think that's to do with, accessing the contracts that govern the project, and this will give you lots of really important information that is really useful for analysing projects. And well, firstly, we're moving much more towards, there's much more transparency of contracts, and many more are being published. As the last time I looked, there was around 1,500 in the public domain. However, for most projects, the contracts are still secret. But just to go back to the previous point I was making, quite often the fiscal terms that you would find in the contract are in some cases available from other public sources. And the handbook kind of shows you where to go and access that information. So question from G. Oh yeah, how up to date is the data from resource? Yeah, from resourceprojects.org. So yeah, this is another really good point of the transparency legislation, is that companies have to report on the previous year. So it's quite up to date. The information is up to date, and NRGI, the NGO that looks after resourceprojects.org, updates the database regularly. And also another really good thing about resourceprojects.org is you can access the source document. So it will take you to the document published by the company, the payment report published by the company. Okay, so a question from Dawn. So without having access to the signed contract, how can you determine if the correct amounts were being paid? Well, I think that goes back to, in some cases you can find the fiscal terms. They can be published in other from other sources. In some cases, for some of the tests, you don't need to have fiscal terms. You can go to national legislation. Actually, Don, I don't know, did you want to address this question about things to do with really fiscal terms and you know, how can you determine how much a company should pay if you don't have access to the contract?
So it's absolutely right that understanding which categories of taxes should be paid and what the specifics are, that is the tax rates and the tax bases associated with those, is crucial for really reliable analysis. Best case scenario, the contract is in the public domain, but as Dom said, in many cases that's not true. And unfortunately, the world we live in, the most important projects usually don't have the contract in the public domain. In some cases, you can find information from investor analyses. This is more common, let's say, on some mining projects, in my experience, than in petroleum projects. But sometimes you can find project-specific information. You can also look to World Bank and IMF reports at a country level, which will sometimes give you, let's say, stylized terms that you could use. It's also possible to use model contracts in some cases, but the further you get away from looking at a signed contract with annexes and all of the subsequent amendments, the lower your confidence levels that you really know what's going on.
Yeah, that's a really good point. Like, you could even go to national legislation, which, you know, is mostly in the public domain, and you could see that there's the tax rate and the royalty rate for oil or, you know, gas or even different types of minerals. But, you know, that's not necessarily going to be the same as what's in the contract. So just to say that unfortunately, we won't have time to answer all the questions, but we will collate them, and I will attempt anyway to answer them, and we can circulate answers to your questions, you know, in the coming days. So yeah, so just I think hopefully we'll have time for some more questions at the end, towards the end of the webinar. What I'll do now is I'll just go to kind of highlight some of the different tests, the kind of practical tests that are contained in the handbook, and we can continue with questions after that. So, okay. Ooh. Yeah. So Just to reiterate what Don said at the beginning, which is really important, it's kind of the principle, the core principle in the handbook, which is that you would calculate how much you would calculate how much you would expect a company to pay. Then you compare that figure with the actual payment reported by a company. And then if you see significant discrepancies, this is a red flag, but that will require further investigation. You need to kind of substantiate any claims of revenue loss with further inquiries. And actually the handbook gives some tips about how to do that. So one of the tests in the handbook, one of the earlier ones, test 2, I hope will be of real interest to many people. It's to do with payments for local communities. So in many countries, in fact I think in pretty much all resource-rich countries, communities living near mines and oil fields are legally entitled to a share of the revenue from mines and oil production in their area. And often the law will say that even say that the money is earmarked for development projects to benefit local communities, but in many cases there's poor transparency and communities don't see the full benefits. But you see now, of course, we have this kind of much more transparency, and in some cases, not all cases, the payment transparency data can be really useful in calculating exactly how much community is entitled to. And then, of course, because the company should disclose the government entity, the government agency to which the money was paid, we can follow the money in and out of that local authority's accounts and make sure that it's spent how it should be to benefit local communities. So just here's an example from India, where are legally entitled to, local district authorities are legally entitled to 30% of royalties from mines in their jurisdiction. And again, this money is earmarked for development projects to benefit local communities. There's some transparency, but I really don't think it's going down to the project level. So again, there's a real opportunity here to use this data, and just to show how easy it can be to calculate how much communities are owed. Here's an excerpt from Vedanta's 2015 payment report. You can see in the middle it says royalties. You can see on the right-hand side it's over $112 million paid from one mine. You can see on the left-hand side there's a kind of strange sort of code for what this for the actual mine, and that's kind of, I don't think that's the common name for the mine, but it was it took just a very quick internet search to identify that this is actually one of the biggest. This is a mine in Rajasthan in northern India. It's one of the biggest zinc mines in the world, and it's in a district called Bhilwara district, which one of the poorest districts in Rajasthan. And it's just such a simple calculation to work out how much communities are owed. So it's just the basic, the 112 million times the percentage, and that gives us almost $34 million that should have been paid by the company to the local district authority and should have been used or should be used to benefit the local communities. But I think there are questions here. Did Vedanta make that payment? Can the local authority account for this payment? What was it spent on? Did it benefit local communities? And this is just one example from perhaps dozens, I guess, of different mines in India where you could repeat this test, and that's just in India. So there's a real opportunity, I think, to use the payment data report to try and benefit the communities. And I think that, even if the payment amounts are relatively small going to communities, they can still have a huge impact at the local level. And actually, there's some work being done in Zimbabwe on this, which is I thought was quite interesting. Just basically showing that even if the actual amounts are quite small, they could have a potentially quite a transformational effect. Okay, so here's another one of the tests in our handbook. Again, I think this can be easily done if you just dig out the data and have a look at the payment reports. This is an example from Ghana, the Jubilee oil project, which is a very important oil project in Ghana, very well known. And actually, Tullow had reported payments voluntarily going back before it was legally required to. So we had kind of more data to play with. This test is to compare payments over time. And this can give you really good insights, and potentially could be a really good tool for identifying red flags. Because if you see a kind of a big anomaly, then that could be a red flag. So we can see for the Tullow oil field, which started production in kind of late 2010, early 2011, we can see that it's paying royalties immediately from the start of production. And of course, this is what we would expect. I mean, you can also see that the royalties are very big, $400 million, $800 million. We can also see for the corporate income tax payments that at the start of production, there's zero. But, this is to be expected. I think this is partly why we produced the handbook, because, it's about using the data responsibly. I mean, just because you see a zero tax payment doesn't mean that there's wrongdoing. I mean, here, the company will be simply recovering its investment cost, and it's not required, to pay any tax. That's so you can see for the first 2 years. And then in 2013, Tullow pays $107 million in corporate income tax. So this shows us that the project is coming out of its cost recovery phase, and it's starting to generate significant income tax for Ghana. And the same applies to 2014, $115 million tax payment. But in 2015, this, there's an absolutely precipitous drop down to zero. So again, there's kind of instantly you've got a red flag there. Of course, again, this doesn't prove misconduct necessarily, but this warrants further investigation. And in fact, the NGO NRGI did follow this up, and they did, find some explanations for what was going on here, which we include. I mean, I won't go into detail now, but we include that in the handbook. So please have a look and please, have a go at these tests. This is a pretty simple test to do, as long as you can find the data going back. And actually, this is where EITI reports could come in very useful, because obviously the data goes back, a long way further. So I think I'll just have a look at one final test, and then we can go into some questions. I guess I'm just kind of giving you a flavour really of what's, the type of tests that are in the handbook. There's 10 altogether. I'm just showing 3, but as I say, just to give you a sense of what's in there. And actually, again, with royalty payments, in some cases, it can be very easy to check that the company is paying the correct amount in royalties. And royalties are a very important source of revenue for the governments There's been over $100 billion worth published already, according to NRGI's database. But again, they are vulnerable to being manipulated and underpayment. There's plenty of evidence for that. So it's really worthwhile doing this, doing this check on royalty payments. And as long as you know how much the oil project or the gas project or the mining project produced, the value of production in that year, and you know what the royalty rate is, then it's a very simple, or it can be a very simple calculation to generate what you would expect the company to pay. So if the value of production is $1 billion, the royalty rate is 5%, you would expect a payment of $50 million. So just to highlight a test in the handbook, we looked at a royalty payment from the company, a mining company, Abaset, in Burkina Faso, gold mining company. And the royalty payment was just over $2 million. I mean, this is kind of a bit of a random test for me. I just thought, well, I'll check if that's, seems to be the right amount. And it took me very quickly, a few minutes internet research to find out that what the revenue was from that particular project. And it was just over $85 million. Well, maybe you can see there, $85 million. I just looked, the figure was in its annual report for 2015. You can see Burkina Faso, there's an excerpt, sorry, from below, the income statement excerpt. It says $85 million. It was very clear from that report that Abaset only had one mining project in Burkina Faso that was producing that year. So we could assume that that $85 million came from that one project. Sorry, this is a bit, sorry that the formatting's a bit out, I think it's fine. So it was also clear from Abaset's annual report what the royalty rate was for this project, 4%. So again, you've got a very simple calculation where we can just, we can generate our expectation of what we, estimate a company should have paid. You multiply the 85 million by the royalty percent, and it gave us a figure that was, almost like 35–40% higher than what Abaset actually paid, $3.4 million. That's $1.3 million less than expected. Again, we followed up with the company and we got an explanation from them. This is all in the handbook. But I just wanted to show that it can be, in some cases, pretty straightforward to generate an expectation. Not all the time, though. Sometimes you won't be able to access the data. You might have to write to the company or to the government, to try and access that data. There can be other factors that complicate the analysis. For example, companies sometimes they sell production in 1 year that was actually produced in the year before. Things like that, different accounting methods. It might be that, for example, transportation costs or processing costs are deducted from the royalties. And again, that's why it's really important to have to identify the fiscal terms, because if you have them, then you will know that the transport costs are deducted, just for example. Okay, so I think I've just given 3 examples of different tests. There are 10 altogether in the handbook. I hope I'm kind of showing that it can be relatively easy to do this. Please don't be intimidated by the data. It would be great if people, went out and actually started using the handbook. But I think, yeah, let's go to some questions now. Oh, okay. So a question from Erica. Same type of info, Chinese companies. Yes, well, okay, one thing I do know is that, well, for a start, there are many Chinese companies covered by in EITI reporting rules. Some of those countries I know you can access quite good project level data. Um, Actually, here's another kind of great thing about the handbook, or thing is, if you've got a company that's in a joint venture with a Chinese company, even if the Chinese company is less transparent, the company it's in the joint venture could be more transparent, and you can kind of extrapolate from that, the more transparent company's data. And there's a good few examples we show in the handbook where you can do that. I think it's a really good one. And also, just to point out, is a really important point about the legislation. The transparency legislation in Canada and in Europe is that if a company is listed on, an exchange, stock exchange in those countries, even if it's not incorporated in those countries, it's covered by payment transparency rules. So, if, for example, Gazprom would be a really good. I know it's not a Chinese company, but it's a very important, petroleum company. It's not incorporated in the EU, but it has to report payments to governments because it's on the London Stock Exchange. And the same applies to, I always get this one wrong, I think it's CNOOC, C-N-O-O-C, huge Chinese oil company, again listed in London. I hope I got the right one there, I get them confused sometimes. And that's disclosing, it has to disclose its payments to governments, across the world. So there's some capture there. And like I say, if the EITI implements project level reporting effectively, then we're going to get a whole raft of more data from these kinds of companies that aren't necessarily covered by the mandatory legislation, but will be by the EITI reporting. So is it more? Okay. Oh, the cash order. I think this is one for Don, isn't it? The cash order. Sorry, you want to.
Yeah, sure. So there was a question that has partly been answered in the chat about whether it's cash reporting or accrual accounting, and it is an important distinction. So the reports to governments or the payments to governments reports are based on cash accounting, and this does create a challenge, significant challenge for annual revenue analysis, because payments might be made in January for things that happened in December. Over time, as we move beyond snapshot data and we look at multi-year data, those issues can kind of come out in the wash, and we get trend analysis where we can move beyond that. But in the early years where there's only 1 or 2 years of payment data, we're seeing in many cases that discrepancies can be accounted for because of the year in which they were paid. I would also just raise, though, because Miles had suggested in his response that that this creates issues around using financial reporting. And that's true to a degree, but the bigger challenge in financial reporting is that if a company is not a single asset company, or the subsidiary doesn't provide financial reports itself, you end up in a situation where companies consolidate multiple companies in their financial reporting, and it's very hard to disentangle what's really going on in the project itself.
Thanks, Don. Yeah, I've definitely found that to be an issue with analysing payment reports and using other sources of data. Any other questions? Yeah.
Cool. Corruption and mismanagement.
Oh yes, a question from Miles. Have any of the tests we've been working on revealed possible corruption or mismanagement that have not been able to explain in any other way? I think, well, yeah, I mean, I've looked at lots of different projects, but where there are definite red flags for these for corruption and mismanagement, but I haven't actually been able to follow up on them. I mean, yeah, I think that's probably the best answer I can give to that. There is a kind of a test on signature bonuses, which are really another important source of revenue, which is very vulnerable to corruption. I guess that's more about trying to make sure that the payments reported by companies match the receipts received by governments. I think, well, hopefully, they will reveal possible corruption and mismanagement. I'm sure that, down the line, I think, it's early days, actually, in terms of analysing the data. And, there aren't so many people doing it, which is kind of partly why we, produce the handbook and are doing these webinars. Actually, I should just mention that, sorry. Oh, right, okay. So the question from James Royston: Global Witness is brilliant at turning investigations into stories that resonate with people. Do you have any tips for how to take analysis of this sort to engage the wider public? I think one response to that would be potentially this whole area of community level payments. In theory, one would hope that they could sort of generate kind of some human interest stories. I think, because it's going to the local level where these payments, the money could actually have material benefits for people, actual, health clinics or, more doctors, whatever it is. I think, there's potential for this, and, also it would be amazing if, communities at the community level were kind of using this information. Perhaps that's one way of turning the data into stories. But then again, also, I think the data can be used to, identify huge government revenue losses, especially in the profit-based payments, which is a bit harder to analyze, but yeah.
Let me just suggest that there are really, I'm sorry, I gotta get my head in the screen. There's really two tests that are most likely to generate stories that I think are relatively easily conveyed. That's not to say that the analytical process is super easy, but the results are clear. And the two tests are tests that help us figure out whether resources are being sold. Resources are being sold to within a corporate family at below market value, and there are ways to use the royalty test in order to do that. And secondly, there are ways to analyze whether corporate tax is not being paid, even though projects look like they should be profitable. And I think that those are two that we should really hone in on, because the message ultimately isn't complicated. Companies are selling their resources at below market value and are paying tax on that lower rate, or companies are finding ways to shift profits, so even though they're paying royalties, they're not paying any profit-based tax. So I would really suggest that those are two areas to focus on, even though they're not necessarily the simplest tests to do.
Thanks, Don. I actually think we've got a hard stop in a couple of minutes. So just to kind of thank everybody who's joined the webinar, please go forth and try out the tests in the handbook. I would say, if you're interested in a certain company, a certain country, or maybe even a certain project. Often projects are of national importance, so it's really, can be very interesting to look at projects. We're planning more webinars that will go into more detail on the individual tests in the handbook. A lot of people have asked for a PDF, so that's on its way in both English and French. There will be a PDF coming up very shortly. Also Spanish translation, hopefully, Arabic, hopefully as well. I think, and we will circulate a recording of this webinar. And I think I will try and respond to your questions. I think maybe there's a way of kind of collating the questions, responding, and then circulating so everyone can see. So I think, I think that's us. So thank you everyone for attending, and please get in touch if you have any more questions, or you'd like any help to use the handbook. Okay, thanks a lot.